Tonight we are live with Serval Resources, critical mineral resources. Welcome to Stopbox Premiere. Well, joining us on the show tonight for this copper special is Robin Birchall, the CEO of Serval Resources, formerly Oscillate. They're listed on the Aquis exchange with the ticker SRVL. And they're going to be talking about their rebrand, their refocus, and their copper solely focused in Africa. And Charlie Long, the CEO of Critical Mineral Resources, listed on the London Stock Exchange with the ticker CMRS. Well, we're going to be talking about the Agadir Malou copper project in Morocco. We were expecting Rome Resources, but they've had to pull out, unfortunately, at the last moment. So the format's a little bit different tonight. We're actually going to have our roundtable discussion at the beginning. So we're going to start right now with Robin and Charlie on that. And then we'll talk to Robin on Serval, and then we'll talk to Charlie on critical minerals. And during that period, we'll have a 15-minute Q&A, which is your chance to ask your questions to the directors who are there. Of course, they are bound by the market rules, but they will do the very best, I'm sure, to answer your questions as best they can. Also, if you're enjoying the show, do please click like, retweet, subscribe where you can, because that does help us out. So let's start with the discussions first of all. So I'll bring in our guests. So Robin Birchall, Charlie Long. I'm also joined by Dan Flynn, of course, who works for Stopbox as an interviewer and writer. So welcome, everyone. Thank you all for your time. I'm calling from the Stopbox studio. It looks like Charlie's calling from somewhere quite... it doesn't look like a green screen background, Charlie. Are you actually on site or near site?
Yeah, we're sort of the nearest decent-ish hotel that we could find. Actually, it's very nice from site. It's a couple of hours away from the site, and then we'll go back in the morning. I'm just Excellent. Here for a few days.
Good. Okay. Well, look, it looks very, very nice there. And Robin, I think yours is a green screen, but that's the project, isn't it? I think.
Yeah. This is one of our license clusters, PL82 in Botswana.
Good. Excellent. Good. Well, as I say, we're going to start with the roundtable discussion. So the first point I would like to talk about is really the impact of copper's price surge and supply shortfalls on exploration strategies. So with copper prices hitting record highs, as many people know, during the course of the year, that's probably down to a number of factors, including green energy demand and of course, limited new supply. How are junior miners like yourselves adapting exploration timelines, targeting higher grade deposits, securing funding and looking really to capitalize on this projected 2 to 3% annual growth in mined output? So, I mean, Robin, let's come to you first, because I know that we'll talk about the rebrand of Serval in a moment, but that's really where you've put all your focus now, isn't it, in copper, and it must be for good reason.
Yeah. I mean, look, my team and I, we had a thesis a few years ago that's connected with gold as well, which is that when inflation gets going, gold does well. And if you look historically back, copper is also quite well inflation protected and follows gold. So we had a gold project which did quite well. And while we were doing that gold project, also in Africa, I was scouting around for copper projects, and I was very lucky. A couple of entrepreneur friends of mine came to me at the back end of last year and said, "Oh, we've got a company that needs a bit of fixing. Can you do it?" I looked at it and I said, "Well, what's in it existing? I don't think is really the future, but what can I do?" They said, "Well, whatever you want." And I said, "Well, I'd like to really build a copper a company over the next 3 to 5 years into a significant developer producer." And we have embarked on that during this year. So yeah, that's where we stand.
Shall I interject with my view on that, or my view on our strategy?
I can't hear Mark.
No, I can't hear Mark either.
Yeah, Charlie. Yeah, you carry on, please. If you
sorry,
yeah,
I couldn't hear you. I was just, I mean, I think the way I look at this, I'm not speaking necessarily for our board, but we came to Morocco looking for good opportunities, and the fact is, the first mine I visited was a manganese mine, and in Morocco, the places where people are making money in mining tend to be manganese, barite, copper. There's obviously cobalt historically, and there's bits and pieces in antimony and special metals, and gold is growing quite fast as well. But really, it's a sort of bottom up. Can we find a really good metals project or minerals projects that we can make money out of somehow for our shareholders? And that could be, a big drill out of a big project or getting into production quickly. And I think we found a project which is probably a bit of both, but we're really more bottom up than top down. And I also personally think that there is a bit of luck in this. If we get into production the next couple of years and there's a bit of a deficit in copper, and we enjoy that sort of high copper price environment, then it will be as much about luck as anything else. But generally, as an explorer, I would always want to find a mineral project that is going to make money at any point in the cycle, because however strong the copper themes are, maybe they're stronger now than they ever have been, and so my view is tainted by history, but you never know what prices are going to do, so you're better off having a project that's going to make money whatever the commodity price is that you're mining.
Absolutely. Well, I did want to ask Robin, I think there was a problem with the mic there, but I'm hopefully fine now. Robin, did you say that copper was almost an inflation hedge like gold in your view?
Yeah. If you look historically back in the 70s and 80s, copper, like gold, when inflation is strong, I mean, if they get around to trying to kill it off like Volcker did in the 80s, it changes the price environment. But it tends to, because it's a metal that is required across the industrial cycle. It tends to rise in line with inflation, as opposed to inflation eating away at the price of it.
Okay.
So I mean, that was part of my view. I mean, look at gold, $4,000 an ounce, right? The last time we saw anything particularly like this with a spike is in the 80s, when there was in the late 70s, early 80s, they tried to have a go at containing inflation. They stepped back from it, and that's when gold surged from like $80 to 400 or something like that. And if you think about it, we were at 2000. Well, 5x, and I'm not really particularly a gold bug, but 5x of 2000 to 10,000. That's the kind of price change you'd have to see to replicate what happened in the late 70s, early 80s. And if you look at the price of copper during that period, especially through a difficult period in the 70s, you obviously the demand environment is different now. That was more white goods and things like that. Everybody was buying a fridge and a dishwasher and a washing machine at that period, and a lot of copper goes into those. Now we have a slightly different a demand profile. It's the new energy vehicles, which have a lot of copper in them, plus also all these data centers, which are very a large demand for copper. You can add on to that. Look, trying to continue. Okay, people say it's had difficulty in the end, it has, but it's still growing at 5%, and it's the second largest economy in the world. Well, that's a lot more than the US is doing at sub 3%, or probably 1.9% going forwards, whatever it is. And at the same time, you have the proper industrialization of Vietnam, Indonesia, and India. So we should see now. I mean, the forecasts have been the supply was going to be exceed demand in the very near-ish sort of term. If you take a long-term view, there was supposed to be maybe 12 to 24 months out that you were going to have a problem with supply meeting demand. But with force majeure and things that have happened at Grasskop and other places, that has changed that radically. That's why the prices risen so much recently. Where I just looked before we started the call, it's $11,029 on the 3-month forward curve on the LME. Well, that's the highest price I think in my lifetime. It's or maybe not quite, but it's $5 a pound. That's very significant, and it's closing the gap with the US contract, which is $5.17 today. So, we're in a very strong pricing environment, but there's also a big, I think, I mean, anybody can jump in here, but I think there's a secular shift going on out of and you got to, if you look at the inflows into our sector, into mining, they're not large by global standards of like the oil market or the general equity market, but for us they're very, very significant, and that's starting to filter down to the explorers, because that's where the beta and the risk is. That's where you can make the significant return. And if you spread your bets across maybe 10 copper companies, you've got a good chance of beating. And they need to beat 12% or whatever it is, the market return, or superior market return. They can do that in this environment. And the flood of capital, it's not big by global standards, but into our space, that's really, really good for the two of us, as explorers, because as we all know, explorers, they need capital all the time. Like going forwards, they all the way until first production is significant amounts of capital. It's not AI, billions, but it's hundreds of millions of dollars to build a mine. And with that capital flow, we've had, I think a lot of us have forgotten what it was like in the good years of 5, 6, 7, 8, and also 11 and 12. There was a little blip in 21, 22 when there was all the helicopter money in the US, all the COVID payments. But it's been a long time since we've had good inflows into equity funds from generalists, and that's going to benefit us for sure. I mean, just look at all the prices.
But does it change? And Charlie, maybe let me ask you this: does it change? Does the macro environment change your exploration timelines? Are you looking to accelerate quicker? Are you looking to go after the easy wins? I mean, does it change anything, or do you still keep going at it?
Not really. I mean, I may maybe in a slightly different world, but the way I see things now is that although there's a lot of money going into mining, and including obviously from US funds and even the US government and places like the Middle East, in big critical minerals funds that are putting money into mining, if you're in the UK market, it's still pretty dreadful. And even globally, the market cap of like the mining sector as a share of all the industry sectors is still tiny. So that the sort of the next mining boom definitely doesn't feel like it started for me. But if it does start, if there's some sort of sector rotation, if AI and tech has a bit of a bust, and people start putting more money into mining, and I know they are in the US a bit more, but less so sort of globally, then I think, and I'm talking public equities here, and we had as much money as we needed, we'd absolutely develop the project as soon as we could. You don't want to waste money, but the quicker you go, the less you spend on G&A, and the more likely you are to be in production, and making cash, and not spending cash, and not just being a sort of revenue generating cash eater. So getting in, just moving quickly is always a good thing. But I don't think I would ever think about timing the market. It's more about, if there's plenty of equity capital for exploration, then I would take a reasonable amount without diluting our existing shareholders too much, and try and progress our projects more quickly.
Thank you. I do want to come on to the AI sort of a bust, if you like, and that's the point I do want to discuss on this. But before we move on to that, I mean, I don't know if Dan, you've been listening. You're an investor. You've been an investor for a long time as well as working in the space. Would you like to see companies go at it more methodically, or would you like to see them jump on the trend, the hottest trend, and just go for it when the commodity is hot?
Well, Mark, can I just say something before Dan
Sure,
speaks?
Robin, yeah, please.
Well, I want to kind of back up what was said, is that it's not that we will try and go faster. It means that we can spend less time worrying about raising capital and spend more time doing what we're supposed to do, which is explore, drill, and the rest of it. In the past, since probably about 2012, other than that little blip in 21, 22, whenever it was, we had to spend an enormous amount of time chasing around after people to try and get them to open their wallets. If people are more likely to open their wallets, and I would say we're at the beginning of a phase, because if you look across the industry, if you look at some of the larger caps and even the mid caps, the investors who've been there all along have finally made some money, right? And that means that they can rotate out of their stocks, and they have capital available. That's the most important part. Is when previously 3 years ago, if they wanted to fund something that they had a position, they had to sell something else, right? And they had to sell something probably at a down or at a loss, or crystallize a book position that was negative. Now most of them are sitting on a decent gain. There's been a tiny bit of pullback. It probably got a bit frothy, but if you're looking at something that's $400 million to $2 billion, they're all up, right? Like if you were in Resolute, for example, Resolute was 50 cents. It's $1.20 now, and that's put $1 billion of extra cash in the pocket. Well, can put $1 billion of extra cash in the pockets of anybody who's a Resolute shareholder. If they take $500 million off the table, that's $500 million. It's not leaving the industry because they're all mining guys, right? They will redeploy that into our sector, and that's where it's going to come to us. And if we don't have to spend lots of time running around trying to raise money, we can take the money and immediately go and do our work, and that'll shorten the time cycle.
Okay.
Sorry, Dan, I cut you off there.
No, not at all. That's absolutely fine. No, all I was going to say is continuing a point you said earlier. I think it is important to note that a big driver behind the gains this year has been disruption at the legacy mines that are currently dominating the copper supply, and obviously that has an immediate positive impact on prices and forecasts. But it does also really serve to highlight the need for new projects, because if supplies are concerned today, and global demand for copper is going to grow by around 70% over the next 30 years, as BHP expects, then we're going to need a lot more copper to draw on beyond what's already out there. So with that in mind, it does feel like the foundations are there for junior companies targeting large, new, accessible projects in stable jurisdictions to really step up and take advantage. Whether or not that means that they can accelerate on the basis of what prices are doing on a day-to-day basis, I couldn't say, as I don't run a company, but it does feel like there is a good fundamental landscape out there.
Well,
yeah, and capital available.
Mm.
Well, I do want to talk about that because, of course, we're seeing commodity prices really outperforming in recent years. We've got a lot of talk about the critical mineral lists from the governments around the world. We've got China, of course, hitting the headlines, restricting supply flow, and Western nations looking to lock up those supply chains. The US markets are storming to all-time highs. I mean, I know the FTSE as well is doing quite well in London. So it almost seems like there's never been a better macro backdrop for junior mining. But I want to sort of pose this question as a thought. And forgive me, I'm young, so I don't have as much experience in the mining sort of cycles. But from what I know from the last cycle, which was post 2008, do you think we need to see like a global crash? The bubble come out of AI and tech, for example. The SMI slide still reminds me that the NVIDIA bubble encapsulated all of the mining companies in the world. That was the value of NVIDIA, was more than all the mining companies in the world.
Yeah,
do you
well,
think we need to see that crash before
No.
the junior mining sector emerges as the front runner? What do you think?
No, we do not want to see incineration of capital value. Yeah, maybe they're overvalued, but you don't want to see a crash, because that'll just suck capital out of the market for everybody. Like if you go, I'm old enough to remember the dot-com boom, and the capital markets after 2000 were pretty terrible. It took 5 or 6 years until the China thesis, people understood it, and capital flowed back in again. We do not want to see that at all. Do I think that they're worth what they're worth? Well, no, but I also own them in my pension portfolio because they've absolutely crushed everything else and for return. But what we are seeing, what is happening in global macro flows, is flows out of those sectors. People are taking profits, okay? Because I can give you an example. There's a stock that I own for my family called Palantir. We bought it for $24. It's $190, right? We've chipped away as it's gone up, and it's we still have a significant a gain on that. That's what people are doing. It's putting cash back, and now they're looking at hard assets because they're seeing gold and copper rising in price as the underlying commodity, and that's where you see the flow, and that's where it's going to benefit all of us in the smaller end of the mining market, because it's been really hard for a while.
So you're thinking that capital is going...
I agree with that.
Charlie.
I think all we just need is a bit of sector rotation, a little bit of capital to come into mining, and there's so much capital out there that all we need is a small. If investors just went equal weight mining, that is a huge amount of capital coming into the sector. At the moment, generalists in London are still not interested in mining. My understanding is that in the US, you have tech investors that are now looking at the raw materials that go into tech and actually beginning to look at mining companies. And it's those sort of changes that you need. But yeah, a crash is bad for everybody, but sector rotation is good.
Yes, agreed.
Yeah. Okay. Interesting. It's interesting to hear that, Charlie. That some of the tech people, tech investors, are looking at actually what goes into their tech and looking to take advantage of that. I know a lot of the junior miners in London have been sort of trying to marry the tech side, the crypto side, a little bit with the hard commodities, which is quite an interesting way to perhaps attract some of that capital over, maybe. And of course, seeing queues. It was in Australia. I saw pictures of queues of people queuing to buy gold, effectively. So it's definitely becoming more talked about, isn't it? But I don't know, Dan. Do you have any thoughts? You're about my age. So you probably haven't been through you're probably at university like I was when the 2008 happened and was completely insulated from any problems.
Yeah, no, wasn't paying too much attention at that point, I have to admit. But I do wonder if, Robin, kind of following off what you're saying, gold ran up an awful lot, and then we started to see more and more people want to get a piece of the action, and that's what pushed it up to perhaps this unsustainable levels it's correcting from now. Do you think that interest could spill into other metals like copper and junior plays outside of gold?
Yeah, well, I mean, be careful about saying that it's finished its run. I mean, inflation is not dead. Absolutely not. And your generation doesn't know anything about inflation. You know, I can give you a small example. I went to university in South Africa, and when I went in South Africa, a beer in a bar was R2.50. It's now, I don't know, 50 rand or something like that. So you've had 20 times the price. And by the way, the price isn't any different. It's exactly the same price as it was before, but inflation has eroded the value of the rand. And inflation, if you look at 3%, you know, you get a double in 10 years, right? The power of compounding is pretty significant. And you know, I'm not a gold bug. Right? I don't run around having gold coins or anything like that. But gold is the number one way that people move to safety or to hedge from inflation, rather than using instruments, even if they're using some kind of fancy instrument that buys gold. And once it starts to get going, I mean, yes, we've seen a bit of a run up, but it could get much too far ahead of itself than what it is now. And then once people make money in that space, it'll flow out into. Well, I personally think it's other metals that have a terminal market. I don't think it goes to energy. I don't think it goes to coal. And I'm not sure that it goes to uranium, but it goes to nickel. It'll go to zinc. It'll go to copper. It goes to other ones that people can just look up. What is the price on LME? Stuff that isn't like that is a bit trickier.
I suppose people like silver because it's got that history of being money,
yep.
and a bit like what we've seen in Bitcoin, what we've seen in gold. Silver could have that same sort of decoupled from industrial use. I think things like copper, if they go too high, they won't be used. And actually, I think the dynamics of the market are a bit different. Where to say gold, where you'd have people saying, "Well, I'm just not gonna build that or produce this much stuff if the copper price gets too high." Plus, they won't be able to get it. So I think, you know, supply and demand always seems to balance out, and that's because when prices get too high or if there's a deficit, people stop buying. And I think maybe silver's got more potential for sort of behaving like gold because
money.
It's an industrial, it's used in industry, but it is a bit closer to money, in my humble opinion, than you know, a base metal, for example.
No, that's absolutely right. That's completely right. Guess the point I was trying to make is that if you have like we had in the UK 10% inflation, copper will go up by 10% because it goes into industrial use. So the input price will always track with inflation. It doesn't get cheaper. It's kind of inflation protected, or that's been its history in the past.
Mm-hmm. Excellent. Well, thank you, everyone. That was a nice little chat there on the resource sector. So thank you very much. What we can do now is, Charlie, you can take a break for sort of 30 minutes or so, and thank Dan as well. Thank you very much for joining us. I know you're going to be sitting in the background watching, and what I'll do is I'll stick with Robin here for Serval Resources. So we'll just do someone saying hello from Brussels, Badia. 1339. Hello. Thank you for joining us from Brussels. We've got European viewers. That's very good. I want to attract some European investors into the London markets. But anyway, Robin, so Serval Resources, before we get into the project specifically, I wonder if you can perhaps walk us through the recent rebrand as Serval Resources and why you've decided to shift your focus away from the legacy projects here onto copper.
Well, look, the shift is because I thought that the existing project was going to be quite difficult, and I knew some very good copper projects, and as we sort of talked about a little bit before, I think that I'd done a few things in metals or minerals that didn't have a terminal market, and I wanted to do something in the terminal market. We had some good success with gold, and that's gone on forwards, and it's that'll eventually be a mine, and we wanted to do that again with copper. So that was the reason for the shift originally, and we've had a little bit of discussion about why I like the copper market. Personally, I didn't really forecast these kind of prices. I thought this would take a bit longer, but it chases a bit after gold, and it's extremely helpful for us in the capital cycle because mining companies require capital. Explorers and developers require capital to build things. It's really no different than some of those AI businesses. They consume an enormous amount of capital before they go cash flow positive. Much more than we do.
And is there any reason why you solely focused on Africa? I know because Serval cat is an African cat. Yeah.
Well, yeah, I mean there's there's some accident in life, isn't there? Robert Friedland and some of those guys have accidentally had some very great successes, but most of the projects that we looked at, we looked across the globe. We looked in Australia, we looked in South America, we looked in North America, we looked in Australia, but it just happened that the ones that we could transact on, we thought where value was decent, were all in Africa. And I have a lot of experience in Africa. We've looked at some other jurisdictions in Africa and turned them down, but we really like Botswana, and we really like Namibia. And well, the elections just happened in Ivory Coast, so we've got continuous stability there, and that's a very, very good jurisdiction. We're lucky to be in the 3 best jurisdictions in Africa, and that particularly for new investors to the mining sector, be they Americans or whatever, that's helpful for them to look and say, oh, this is a safe jurisdiction, this is a democracy, et cetera, right?
Absolutely, yeah. And I did note that I think your objective, you state, is to become a leading mid-cap explorer and developer. So I wonder what more you can tell us about that. Does it mean your model is to take projects through to discovery and development towards the mining side as well, rather than simply looking for an exit sort of post-discovery?
Well, look, I mean, we've done that in the past. We've built mines, so it's always better to get somebody to bid you than it is to put the for sale sign up. So we have the tools and the capability, and the team is able to do that. And of course, if somebody bids us a good price, we won't say no. But we're in it to build these things.
In it to build these things. Okay, good to hear. So let's talk about the projects themselves then. So you've been very active on that M&A side, securing access to 3 exploration opportunities in Botswana, Namibia, and Cote d'Ivoire. So it's all African based. Mm-hmm. What sort of criteria were you looking at when you took on these projects? What is it you wanted to sort of add into the portfolio? Easy pickings, low hanging fruit, big scale? What were you looking at?
Well, as a small company, you take what you can get first and foremost, and we can't overpay, and we don't have a lot of cash, so we leveraged our existing relationships with people who know us and trust us and seen us make a lot of money from them in the past, and know that we're good custodians of capital and build things. So we went to our colleagues and friends in the industry, and then we sorted through lots and lots of opportunities. But they need to have some minimal criteria, right? We need to know that they're going to be able to be developed into a resource. We need to know that it's in a jurisdiction that we can function in, and we need to know that the stage that they're at allows us to extract maximum value through the exploration, through the drill bit and other techniques that we use. And as we grow as a company, obviously we will look at other opportunities going forwards, and we'll see what we can come up with. But in each one of these jurisdictions has their advantages, right? Look, Botswana, our licenses are there's two large scale producers, $5 billion market cap. They have assets in other countries, but it's proven, right? Namibia is known sort of geologically to be an extension of the Central African copper belt, so Zambia and DR Congo, but it's been underexplored because the area was closed in the past due to war and other things. And Ivory Coast is slightly different. Ivory Coast, is well known for gold, but the previous project I worked on had a very large copper signature, and I personally think that and look, I'm not alone. Newmont, one of the biggest copper gold companies in the world, chose it as its only jurisdiction in West Africa to go and look for projects, and so we have picked up something which has a very similar geological signature to the stuff that they're investigating, and we're kind of in an elephant country there.
So is that the reason, sort of, if we just talk about that sort of the acquisition deal with Kalahari Copper, so that was recently expanded to include both the Botswanan and the Namibian copper portfolios. So is it that sort of geological similarity that you were going for there? I mean, how much do you understand at the moment?
No, those two systems are completely different.
Okay.
They're completely different kinds of systems, but they're both well known. So that's why we like both of them. They each have their sort of different specific signature. The Namibian one was more advanced. Is more advanced and has more. I don't want to say potential, but there's more lower hanging fruit. Let's call it that. As compared with Botswana, but Botswana is a much better known jurisdiction. It's got two very large copper producers in it, so that's why we wanted to be in Botswana for sure. So each one of these are slightly different, but have their advantages. And as a copper company, we don't mind what style of deposition it is, as long as they're going to be mineable with enough resource scale. And we want to see what would be considered high grade now. It wasn't in the past, but anything above 1% is considered high grade.
Okay, and just thinking about the Namibian project then, so a decent amount of drilling has been completed on this asset. I mean, what has the work found so far?
Well, there has been some drilling. I would call it drilling. It was drilling for license tenure as opposed to systematic. What we would do is we would go back. There's a lot of historical data that we can use. Soil sampling and mag, plus some drill holes and things like that. And we'll go back. We'll probably replicate some of that geophysical techniques because it'll show us where there's structure and where there's mineralization, and then we have to drill. But we know where we're looking because of the drilling that they previously did, where there's good GC targets, 15 to 30 million tons at 1 point something, 1.4% or something like that. That's with a pre-fees or something, that's probably worth $200 or $300 million.
So you say you already know sort of where to start when you do actually get active yourself?
No, absolutely. We walked the property last week with my geo, the primary target, and there's the targets there. You could see at surface. You could see the dolomite kind of section of it. And underlying it, the shale, which is the primary target. And yeah, they just didn't really have enough money to drill the way they wanted to drill because it's a private company. And we'll go back there and drill that properly.
Okay, and that'll be your first target, effectively already identified.
Yeah, absolutely. Yeah.
And do you know when you'll be looking
there's more
to drill
targets there. It's probably next year sometime. You're asking me a question I can't really answer because I haven't just been there. We need to do budgeting. We need to work out. There is a rainy season there, but it's not like in the Ivory Coast where you absolutely can't do anything. So we just need to have a little think about it. I need my geological team to do a bit of work on it. That's what he's on his way home now. Yeah, we'll be able to update the market in due course on that. But it's clearly next year.
Okay. And in the Kalahari copper belt then, so lots of people will be familiar with this. It's become very prolific for copper discoveries with many majors active in the area. I mean, how do you think your licenses stack up in terms of their potential? I mean, you're probably a little bit late maybe to the table, or maybe there's still some great ground to be had. I'm not sure.
Well, I think ground is excellent. I mean, we have some of the best in the center of the belt. And then, there's some other very worthy comparators out there like Cobre. We have land in close proximity to them. Obviously, they're reasonably further ahead than we are because they spend money drilling. But as you say, South 32 is there, BHP is there, Teck is looking. There's the two mid caps are there. There's a lot of activity, and we're having a chat about this around the campfire or whatever, around the fireplace last week in Namibia. And we're saying 5 to 8 more mines to be discovered there, probably something like that. Whether or not they get grouped together under one mid cap or major, who knows? But there's probably 5 to 8 mineable occurrences at least in the belt.
Really? Okay. Well, so it's still very much underexplored then. Okay, that's interesting to know.
Yeah, definitely underexplored.
In terms of next steps,
underexplored.
Super underexplored. Yeah. In terms of next steps, then, Robin, what are we talking? You sort of alluded there that it will be drilling next year. I'm not going to hold you to a specific date, but what are the next steps? What are you going to be doing the rest of this year as you lead up to actually getting active on the ground?
So we need to put an announcement out, but we've told people previously that we're doing work in Botswana, but I need to just lay it out exactly what we're doing. But that process is underway. We're like in the mobilization phase, and we've contracted and things like that for the work that we need to do. Like we talked about what the work needs to be, but I want to put out an announcement that lays it out, what it is exactly and what the timeline is, so that people can follow along with that. We need to get that out in the next little while. And then right now, having been to Namibia, we need to do budget, and then we need to lay out timelines, and then we'll announce that too. And we're doing the same for Ivory Coast. We were in Ivory Coast a few weeks ago. We'll be working out budget for that and what to do there. So we've got a series of announcements that'll come out, just keeping the market informed, so they can track what we're doing. And then on the corporate front, obviously we're graduating to AIM, and we're in the middle of that process, and we're trying to get it as quickly as possible.
Okay. Good. Now, so the Ivory Coast project, and so that, how do you say the name of that? I don't know if is it
Jekwe.
It is Jekwe. Yeah. Okay. Right. Good. So that's the copper and molybdenum gold prospect there. So, I mean, I wonder if you can tell us a little bit more about that large anomaly that was there. It was first discovered, I think, in the 70s. So, what work has been done?
Yeah. So the French BRGM, Bureau de Recherche sur les Minières, did quite a bit of work in the 70s and 80s, and we actually went and had a look not that long ago. It was my first not visit to Ivory Coast, but to the prospect, and I took my senior geo with me. I had a thesis about what's happening there geologically, but I needed him to true the facts on that. And we came away with him saying, "Yeah, Robin, I 100% agree with you what you're thinking on this." This is he actually, for a while ranked it above Botswana, because he said we're an absolute elephant country here. If we discover something, it's going to be very, very large because of the way that the boundary between the Proterozoic and Archean and these intrusives are not small. They're large scale. And we know from other parts of close to the boundary, there's some pretty interesting stuff. It's why we sent the assays back to reassay them for gold, just to see what's going on.
Okay, and I mean, why was it never properly assessed and advanced in the past?
Well, Ivory Coast had a civil war. It's not particularly easy to go exploring when people are running around with AK-47s, which was more or less settled by the current president, which is probably why he won again. And there's been significant societal development. Like it's quite an event, quite a well-developed country now, which you can put a lot of that down to him as the president. He's worked very, very hard to modernize the country and increase GDP through development. And so that's one side of it. The second side of it is that they did a reform of the licensing legislation. It was very, very bureaucratic before. And it didn't really give you the time you needed to be like it didn't. Most countries go 2, 3, 3 or something like that with a renewal after phase 1 and renewal after phase 2. It didn't have the system like this. It was extremely difficult and bureaucratic. And the World Bank, I think I can't remember exactly. It was about maybe 8 years ago. They came in and reformed the system, and there's been kind of an explosion of exploration subsequently because they made it much easier to hold on to your license and meet the conditions for advancing.
Okay, thanks, Robin. So just on some of the work that's been done, you and your partner have done phase 1, haven't you, at the moment? I mean, when you look into well, first of all, did that give you anything sort of significant to work off? And when you're looking to sort of begin phase 2, what will that entail?
So phase 1 was just to true the facts on the old BRGM work, to make sure that what they had literally hand drawn on maps was true. And all that came back excellent. Like, yes, this is exactly what's going on in the system. It's slightly off. So you have to remember now, every single geo has a GPS, so they know where they're standing to within less than 10 centimeters, right? Back in 1980, you did it with a compass. So you could be off by hundreds of meters, or maybe a kilometer off. If you've been tramping through the bush for a long way, you can get your magnetic declination wrong. So we needed to true that up, make sure it was right, which we did. It came back with very nice values, and so now we can rely on the rest of that information. The next phase, again, I'd kind of like to defer until we announce, but because we're in the process as the team to work through that. Like the way we have a process where the geos will come up with an idea, present it up to the more senior team. We'll work it up. We'll decide what the right thing to do is, and then we'll send it to the board for approval. So we're kind of in that phase. But I can tell you, and we're not quite decided on it, because there's things we can do for easy wins, but we probably need to do a bit of larger scale stuff because the opportunity is much more significant than we realized at the time. Like, it's really a very, very good license. But we're not tech. We can't spend $10 million doing soil sampling across 50 square kilometers or something like that. So we need to have a little think about what we can do immediately, which will generate news flow, but what is also the right thing to do as general exploration process.
Okay. Well, that does sort of, I think, bring me into sort of tying up some of the thoughts. I mean, I'd like to sort of ask you, I mean, we have covered a lot. We've talked quite bullishly about copper. You've talked about the projects you've managed to lock up here. I want to sort of give you the opportunity to perhaps sum up why now is a good time to invest in Serval Resources, given its sort of refreshed focus, let's say, and brand. And you've got a lot to go at, haven't you? So it's sort of interesting. I don't know if you can...
Mark, we're outrageously cheap. That's all you need to know. Like, we're absolutely ridiculous price at the moment. And I understand that there's some, we've had investors who are in for other types of projects, and they're the capitulators. We've moved 66 million shares or something like that since we announced the Namibia extension. Personally, and having been an investment banker in the past, it feels to me like that we've eaten through most of those people who are just like, I don't care about this company anymore. I don't want anything to do with it, and they've sold their stock. And I think that we'll see significant share price appreciation up to probably fair value. I don't know. I mean, like 4p or something like that. So at 0.375, this is an absolute bargain. I know some of our friends in the market. Obviously, we got through 66 million shares. Definitely, some of our friends in the market who are professional and understand mining. I mean, they were like, "Wow, it's really cheap. I'll buy some." But Aquis is a difficult market, and we'll see how it goes. But yeah, I think the stock is at $11,000 copper. It's outrageously cheap.
Okay, well, there we go. We heard it from you. I mean, where would you want to see the company? I mean, a year is a long time, but it's quite short in mining terms. But let's say a year. Where do you want to be this time next year, let's say?
Well, I'd like to have a resource in Namibia. I'd like to have 2 discoveries, maybe 3 in Botswana. And I don't know what we can get to. I refrain of speaking in Ivory Coast. I don't think we'll have enough time to make a discovery there. I just don't think that. I don't think we can do enough basic stuff and drill to get to a discovery. But we'll probably have some enormous targets by the end of next year for Ivory Coast. And with all that, I don't know. I mean, if the price stays above $11,000, with all that kind of stuff, market cap maybe $80 million.
Okay. All right. Well, Robin, thank you very much for your time. So we're now going to open up to the floor for questions. I do see a couple have come in already. I know I was going to ask you one, but seeing as it's come in from Steve, let me bring this up. So Serval is currently on the Aquis and liquidity is very low. How does Robin hope to improve the liquidity and attract the capital he needs to develop the projects?
So we have improved liquidity. We traded 66 million shares in the last 3 or 4 weeks, and in the probably 50 weeks before that, we maybe traded 20 million. So we're dealing with that. That is a significant increase in liquidity. It is Aquis, and so liquidity is a bit lumpy. And then the second thing is, well, attracting capital is about the quality of the projects, and people will look at the quality of those projects. Anybody who knows a significant amount about mining knows that all 3 of those jurisdictions are excellent, and our assets in those jurisdictions are very good as well. So yeah, I mean, we're doing marketing, doing this kind of stuff, getting it out, and people will look at it and go, well, you're really cheap, and then buy the stock. That's the only way liquidity goes.
Well, one surefire way to attract investment is to just do it, isn't it? People do complain that Aquis is lacking liquidity, but there are companies out there who have gone out and they've gone and raised capital and they've gone and done work and they've got lots of interest and following. So that's really the only way to do it, isn't it? But that actually does bring on a nice question here. Greetings from Yorkshire. Another Steve this time. My home county originally. Which project is Robin most excited about and why? And I think this is always a tough one for CEOs. It's like asking which one of your children is the favourite. I've been told a number of times when I've asked this question, but I don't know if you have any.
I don't know. That's a super good question. The assets in Namibia are further along, but Botswana is a better known jurisdiction, and there's 2 miners producing 200,000 tons of copper per year in Botswana. That's going to be, that gives it a much better, more credence than Namibia at the moment, because Namibia doesn't have a large scale copper producer. It's had some in the past, but and it's a different style of mineralization. So even though we have a very, very good license package in Namibia, I guess I have to go with Botswana as my favorite. And then what I like about having 3 is that, I mean, what if we find a breccia pipe in Ivory Coast and it's got 10 million ounces of gold in it? Well, everything else will become irrelevant.
Yeah, exactly. Okay, so Botswana, well, it's a lovely country, very good. For mining, very good government there, so that's good. Okay, excellent. So if anyone has any questions, please put them in on the YouTube or on the Twitter, or the X, I should say now, or send us an email, we'll pick them up. There are some others that have come in I've seen. Could the land in the KCB be an obvious takeout target for the likes of Cobra, etc., if early exploration proves encouraging and shows mineral potential?
No, not for Cobra. Cobra is like us. It would be more like MMG or Sandfire, or maybe another mid-tier. I don't look. All the majors are there as well, or most of the important majors, like 3/4 of them are there. So yes, absolutely, it could be a very significant takeout target. We need to do work there, work it up, and make it look interesting. And I no doubt that we'll get taken out if we come up with good stuff. I don't particularly want that to happen. I mean, because I'd quite like to build a mine there. But if somebody offers us significant cash, the shareholders will tell us what to do, and then they'll say sell.
Okay. Okay. Well, it's good to have those options on the table, isn't it? For sure. Don't want to get too ahead of yourself. So here's a question that's come in from X. Is there any update on the joint venture with Evolution Energy Minerals announced in March over the Chikundu prospect in Tanzania?
No, not really. The diligence came back that it wasn't an asset that we necessarily wanted to pursue. So, yeah, I think
Okay.
in the end it was a probably too small scale. We at the beginning we had to go after relatively small stuff, but we were extremely lucky to be offered the Kalahari package, mostly because of my connections to the vendors, and
Okay.
that superseded it significantly.
Okay. Okay. Do you have any update on the disposal deal with Pulsar for the hydrogen assets? Is that confirmed?
I can't say anything about it right now because
Okay.
the announcement's coming very soon.
Okay.
So I can't get us all in trouble. Don't ask
Fine.
me that question is the answer.
No worries. Okay, we'll wait for news on that. Invest Wisely asks, will Robin or the board be buying any shares in the open market to show their confidence that the market cap is cheap? Otherwise, it's just words.
Well, look, as I've just told you, we have disclosable information, so we can't buy. Some of the staff have bought, the ones who are outside who are not in blackout. But we have so much corporate activity that we're almost all permanently insiders, which is really quite frustrating. Yeah, I mean that's the answer to that. We don't really have much opportunity to buy. We go from one inside piece of information to the other.
But given the opportunity, you would. Is it fair to say?
Yeah, I mean, I suppose we could buy some shares, but look, our job is to run the company, not buy shares in the company. You know, we have our stake in the company, which we should. You know, the compensation package means that we are incentivized very much to make this successful. But I don't personally view it, and I never have, is my job to buy shares in the company. Like, we're not the capital providers. The market and the investors and the institutions are the capital providers, not me.
Okay.
My expertise is running mining companies.
Okay.
Otherwise, I'd be an investor.
Well, we can certainly judge you on your success. That's the best way. Another question from Invest Wisely. What is Max Denning's role?
He's a non-executive director of the company.
Okay, so dead simple.
Yeah.
Let's have a look if we have some other ones. Oh, here we go. Yeah, that's an interesting one. Why did the company choose to move away from the hydrogen exploration? I remember interviewing about that, and I thought it was very interesting.
I don't really want to talk about that because that's the past, but I didn't think it was a valuable asset. I mean, look, it's very difficult. We're selling it, so I can't. I've got to tread carefully.
Sure. Okay. But yeah. Okay. In short, you didn't feel it was the
future of the company
worth it. Okay. Fair enough. Let's have a look. I think there's a couple more I can see. You mentioned future metals alongside copper as a focus for Serval. Will these be secondary to copper?
Well, in both cases, in all cases, in all license areas. So in Botswana, almost always the copper comes to silver. So, but it's secondary. So that's what we mean by secondary. I'm not 100% sure, but I think, well, I know the silver as well in Namibia, but sometimes there's a bit of cobalt as well.
Okay.
From memory. And in Ivory Coast, there's moly, but I don't really like moly, to be quite clear. Molybdenum is a very difficult metal. It can be substituted by other steel-making metals, and it can be a little bit like zinc, but worse, in that the price will run up, and then everybody takes their mine that has molybdenum as a byproduct and makes that the primary product and optimizes their process to produce more molybdenum, and then it drives the price down. So I'm not terribly interested in it. But if it's there, well, I mean, we're going to sell it. Mark, I can't hear you right now.
Oh, sorry. Yeah, I'm
There you
just
go,
saying. Yeah, thank you for that. I think there's a couple more questions. Let me just check. I don't know again what you can say. It's always a good question, but it's always difficult to answer, isn't it? Where the company sits financially, will existing cash and the proceeds from the hydrogen disposal cover near-term work at the new copper assets?
Well, it depends what you mean by near term, but yeah, basically.
Okay,
I mean, we're going to need more capital. We can't drill.
sure.
As we had a long discussion about with critical minerals there, these mining companies require cash until it's probably I mean, what's the life cycle of exploration? 8 years to production? 10? 12? Depends what jurisdiction you're in. But if it's 8 years, you've got 8 years of cash in front of you because we're not selling anything. So
Yeah.
yes, you always require more capital.
Okay.
But if you have a good deposit, then people will provide it to you.
Indeed they will. Okay, well, I see one last question that's coming on X, and if anyone else has any questions, do post them, please, on YouTube or X. We'll pick them up. We've got only about 2 or 3 minutes left with Robin. But Robin, maybe you can talk us through this question. So aside from yourself, can you walk us through some of the... Oh, it's the career. Okay, the career success across the rest of the board and the senior management. For example, the new executive director. So yeah, let's get a sense of the skills of the people in the team, if we can.
Yeah. So, well, look, Brian Gordon's an excellent appointment. I mean, he has been very, very good in assisting with capital generation and also with asset funding assets. So he was instrumental in the Moshiko transaction, that enormous copper deposit in Saudi Arabia. He's worked all around the world. He was instrumental in the uranium in Niger, and not just a number of transactions like that. So he's got comes with an enormous amount of experience, and B has been instrumental in finding great assets and helping raise capital for them. Max is a relatively young man, so he's still towards the beginning of his career. But you have to remember, I was asking somebody to join the board of an Aquis company that had no assets and had a market cap of like £1 million or something like that. So you don't get the ex-CEO of BP or something like that at that point. But Max is a very capable young man who has a desire to be very successful. And John we inherited, so he was on the board when I came. But we're not finished with the board. I mean, obviously, in part of the transaction, people remember, we're going to get 2 directors from Kalahari. Well, they have the right to appoint up to 2 directors. I'm pretty sure I know who the two will be, and they both have a track record of success in capital raising.
Okay, excellent. Well, I don't see any more questions, Robin. So I think we can let you go. And thank you very much for your time. I know it's you're newish to the role. It's not a young company, but in its current iteration, it is a young company. So thank you for sort of taking us through everything, setting the scene of the new refresh and what you want to achieve. And it won't be a year until we speak, of course. But yeah, we'll look forward to a year's time and see where you are with the resource. But we'll be keeping tabs as we go on that journey with you. So thank you very much, Robin, for your time. Enjoy the rest of your day.
Afternoon here, yeah.
Thanks.
Thank you, Mark. Always a pleasure to do work with you. So yeah, I'm sure we're going to be busy. We have been busy. We've had a lot of announcements. I'll be doing an interview with you in the not too distant future, I'm sure.
Excellent. Robin, take care. See you next time. Thank you. Okay, well, that was Robin Birchall from Serval Resources. So now I'd like to bring in our next guest, which is Charlie Long, CEO of Critical Mineral Resources. Charlie, thank you for waiting in the wings there. How are you? It's been getting slowly darker, and I think you're muted, just FYI. But I can unmute you here, I think. Oh, no, you've muted yourself. So there you go. There we go, yeah. How are you?
I was listening very interested in that, just to getting some tips and tricks.
Good. Excellent. Good. Well, it's your turn now to sort of tell us. Well, first of all, introduce the Agadir, is it Melul? Is that how you say it? Agadir
Melul, although
okay, Melul.
I'm telling you how to say it. The locals say it in a different way to me. So
yes,
but yeah, Agadir Melul. So what do you want me to say? Just a general introduction?
Yeah, just introduce the project, the location where it is, what's nearby, why you like it. Just give us the introduction to it. That'll get us going.
Yeah. So it's in the western Anti-Atlas, although it's kind of east. It's kind of central Morocco, and sort of east of Agadir, about 250 kilometers from Agadir, I think. Agadir means like a storehouse, so Agadir Malul just means white store, and it's a sedimentary copper deposit. It's in limestones and other sedimentary rocks. This copper mineralization, which you can follow for many miles across our portfolio, and I think our portfolio size now is about 80 kilometers squared, of which is probably 50 kilometers squared of limestone that we're targeting. And our initial exploration target is for 20 to 25 million tons, which basically means of that 50 kilometers squared, if 10% is mineralized to a sort of economic grade and mineable grade, mineable thickness, that would be about 5 kilometers squared of limestone, and we're looking for 2 meter thickness and about 1% to 1.2% grade. So it's a little bit unusual because it's relatively thin. The grade's not fantastic, but it's really shallow, and it's semi-continuous. Like if it was a whole blanket of like continuous mineralization, we'd be looking for like 50, 60, 70, 80% mineralized, but we're going for 10. We think it will be more, but basically the fluids have come into this limestone either this way or this way. We think probably this way. So it's probably SEDEX. And this is like a regional event of hot copper hydrothermal fluids with copper and silver in places, fluids that have gone along the contact of the basement, the old granites and just sort of old Precambrian rocks, and been forced into the limestones. And so where the limestone's a bit more porous or permeable, you get high grades, and where it's less permeable, you don't. And you can kind of see the lower grade stuff. It might look attractive because there's fractures where the mineralization's gone through and it looks like it could be high grade, but actually where it's really sort of almost glassy, almost creamy looking, the grades are lower. And then where there's a bit more fracturing and a bit of a coarser limestone originally, and that's kind of theoretically, but it's more permeable for whatever reason, you've got higher grades. And so the mineralization is very much continuous. It's always there. Sometimes it's thicker, sometimes it's very thin, sometimes it's very low grade, but it's just a case of drilling it out. And there's also, which I've popped on Twitter a few weeks ago, there's also a mineralized rhyolite there, which at the moment we don't know whether it's 3 or 4 meters thick, like our target is 2 meters thick in the limestones. Is this rhyolite similar, that it was mineralized at the same time as the sedimentary rocks, and therefore it's a similar sort of thickness, or is it an intrusion where the mineralization comes from underground, deep underground, and therefore much more exciting? It's not a massive rhyolite, but rhyolite is, it's an igneous rock. It's basically an explosive volcanic rock, but with a chemistry similar to granite. And if you've got one rhyolite, you most probably have more. And a lot of our mineralized rhyolite is probably hiding underneath the limestone that we're going to be drilling. So it's just another thing. It's just like having two rocks to target with copper mineralization instead of one.
Okay. Interesting. I just want to ask you a little bit, if I can, on that sort of 10% versus the 80%. Is that just explain that? Is that because it's really like dense, sort of high grade, so you need to sort of go after that sort of 10%, if you like, of the mineralization?
So imagine a blanket of sedimentary rocks, literally like a woolen blanket that's lying on top of an undulating, sort of hilly basement of very old Precambrian rocks, and that pretty much the whole of that blanket is mineralized to some extent, but some of it is only 0.2, 0.1, 0.15. It's above the sort of background copper levels that you would have in basically anywhere in the world, but it's not economic. But there are areas where it's more porous or more permeable, where the grades are elevated, and they might be from 0.5 to 1.5, and that's what we're hunting for. And at the moment, it's a bit of a thumb suck, but we feel that if 10% of that limestone target is mineralized, so 10% of 50 kilometers squared, then we're going to have 5 kilometers squared times 2 meters thickness times 1% or 1.2% copper, and times a density of rock of 2.5, and that gets you to sort of 20 to 25 million tons of rock. And it is a bit of a thumbs up, but we feel it's quite conservative. And of course there are thicker areas and there's thinner areas, and we might find some nice high grade thick areas, and that could transform the whole strategy. But we feel like a 10% success rate effectively in our drilling is pretty conservative, and we're all confident that's going to happen given enough time to drill the project out. I think it's important to say that we do have two strategies. So hang on, sorry about that background noise, but we have a second strategy, which is a near-term production, sort of fast-tracking production of 1,000 ton a day operation, and for that we only need 3.5 million tons of rock. I hope you can still hear me. And so
yes, I can hear you fine. Yeah.
We're really focused on that now, because we want to get developing the project as soon as possible into production. Okay. So we're focused on like a 3 million ton resource, which is hopefully convertible into sort of 3 million tons of reserve. Start building the mine, and then carry on drilling the 50 kilometers squared of limestone that we've got to get the sort of bigger resource. So there's very much two things going on at the same time. So maybe I'll ask a long question while this sort of dies down.
Well, yeah. So that's the call to prayer, I guess, is it? Yeah. Which is that correct? It's a lovely sound. Yes. I've experienced it myself a number of times. So yeah, it's really nice to hear that at this time of evening. Well, I will just take the opportunity. Actually, I know there's a young man called Seb who is a keen. Very young mining investor, actually. I think he's only about 10 or 11 or something. I think he's Seb the Programming on the YouTube, and I know he's watching this. I can see the comments, so he's always wanted a bit of a shout out. So Seb, there's your
10-year-old investor. Well, good for him. I hope he wish him all the success.
Yeah, exactly. Well, he may hold shares in I don't know, but if his dad can help him, maybe he'll hold some, and then yeah, he can do well. But anyway, okay, I hear the call to prayer has finished, so that's nice. We can hear you nice and clear.
Yeah.
You often draw these parallels with the nearby Tizza mine, don't you? I mean, how strong of an indicator is that of your project potential? Because neurology is something not to be dismissed lightly at all, really.
So it's the same. It's the same rock, same age rocks, same setting, geological setting, where the mineralization is predominantly on the contact between the limestone and the underlying Precambrian old rocks, and you get mineralization in both. But we think it's mainly in the sedimentary. The Tam Jute is called the Tam Jute dolomite. We call it limestone. It's technically dolomite because it's got, I think, elevated levels of aluminium in it or something. But it looks like limestone, and we're about 50 kilometers away, but our senior geo worked at Tizert, and he's worked pretty much all over the country, and the geological maps back it up, and we know that we've got exactly the same age rocks, same regional mineralization event, but we're just at an earlier stage of exploration. And I think Tizert is 130 million tons apparently at about 0.9% copper. We don't know if we've got something as good as that, but we've got a lot of ground, and our land package is increasing, so we've got a good chance of finding, the same thing, or half of it, or a quarter of it. Any of those scenarios would be an excellent result. So yeah, it's very much a genuine analog. The difference is, I suppose, not only are they later stage, but also they are deeper. So their mineralization tends to sort of dip to the north, I think, and it gets quite deep. Whereas most of our project is quite shallow, up to about 50 meters deep. So we don't necessarily need the same grades as them. We don't necessarily need the same thickness, because we've got a much lower both capital development situation and OPEX situation.
And you say your geo actually was at Tizert, so I mean, he obviously knows a lot about that deposit. Then, anything that tempted him over the sort of your ground? Does he want to go again or something, or find something similar?
So he's just a very good friend of our COO Nurdin, and they do a lot of work together. And he's no longer at Tizert. He's now professor at university in Marrakesh, and he's a very, very well known guy in the country. He actually does the technical auditing for SGS for a couple of the big mining companies in Morocco, including OCP. So he's a resource modeler. He's a quality guy, and he's just a lovely man. So yeah, no, he's not particularly entrepreneurial, I wouldn't say. He's more academic, but he's part of our team, and he's a sort of loved part of the family, as it were, out here.
Okay, well, that's nice. Yeah, that's nice. So, I mean, prior to your drilling campaign, what work had been completed at the project, and what did it show you? Really, did it show you where to focus your efforts, or did it show you what potential it could have, or is that what your program is all about?
So it showed us that there was some good results, some less good results. It showed us, I guess, it informed our exploration target of let's aim for 10% of this limestone target being mineralized. It showed us there was copper, in some places there's silver. It showed us that it's quite nuggety, so you get higher grade areas and lower grade areas, and it's actually quite difficult to know exactly what the grade is with just a few holes. You need to sort of keep on drilling and take bulk samples to get a good feel for the grade. But actually, what we know from Tizert is that having a sort of 1% ish target grade is probably about right, because as far as we're told, as far as our senior geo says, that is what it is. So the trenching showed us where the mineralization is. It showed us where the lower grades are, the decent grades. Showed us how shallow it is. So yeah, it was just sort of an important part of the development of any project that we're going to sort of carry on with. So we will be doing trenching ourselves in other areas before we drill, because we want to be drilling in the better areas and not be drilling the lower grade areas.
Sure. Okay. So is that your strategy then, to sort of really focusing on the better areas? I know you're targeting that initial mine, weren't you, then exploring sort of regional potentials in parallel. So what is your plan of attack?
I mean, it's a massive project. So if you come here and walk, drive, you can very easily spend weeks walking the project. So yes, we can't just drill it sort of either randomly or just a grid pattern across the whole thing. We need to target our drilling, and so trenching is one way of doing that. And once you've once you've trenched an area, and we're lucky that a lot of this mineralization is shallow and or outcropping in a cliff or a hill, side of a hill, you then drill around the higher grade trenches and then sort of spread out from there, and it just helps you. It's because it's down to, you don't want to be drilling low grade areas for no reason. So target generation is a big part of what we're going to be thinking about over the next few months and probably years.
Okay. So is that what this drilling is all about then? Sort of getting those targets sort of honed down. And is anything
is we're looking to let's say by early Q2 have sufficient resources to push the button on the feasibility study and try and get into construction in 27 probably. That's
right,
kind of our ambition at least. And so we just want to have some quite closely spaced drilling, so indicated drilling that will give us, say, 3 million tons of indicated resources that we can then upgrade to reserves, and have 1,000 ton a day for say 10 years is approximately 3 million. So tons. So at the moment, that's kind of what we're focusing on. But we're obviously also thinking about drilling the whole project and how we drill sensibly, because a lot of the copper mineralization is hidden underneath unmineralized layers of limestone, and we don't want to be drilling too many rubbish holes.
Absolutely, yeah. You want to make sure you're getting to the good stuff. So, and is anything? Are you seeing anything now, or is it a bit? I know you can't disclose anything, but anything you're seeing sort of coming up that's sort of giving you confidence in what you've got? Are you happy with what you're seeing? It's going to be
we're happy. It's going to be very much in line with, I guess, how we've calculated our exploration target. We're not, our first holes aren't, they're much better than 10% success rate, obviously. The 10% success rate is over the whole thing, and our thickness is probably a bit thicker than 2 meters, but we know that normally when you have greater thickness, the grade drops down a bit. So I still think we're happy with 2 meters, maybe a bit more, around 1%, 1.2%, very shallow at surface and less than 30-40 meters underground. That's kind of our target, and that's what our drilling is going to show. But there will be areas which are sub-economic, and that's the point. Is drilling is as much about finding stuff as delineating where the good stuff is and writing off where the not good stuff is. Every hole kind of gives you information that is useful.
Absolutely. And I mean, will you be looking to release those? I guess you will have to release the results to market, but you said that the feasibility study next year. What can we get a sense of the scope of the project perhaps before, because it does take a long time to put an FS together. So I mean, in terms of sort of seeing some results, what do you think? What are we thinking?
So I feel a bit bad about this. We said we were going to put drill results out this month. I think probably going to be in a couple of weeks' time, so mid-November. And that's just, I guess this is my first time managing a company that's doing that's drilling. I've worked at companies that are drilling, but completely different situation as a sort of BD guy, and things just take longer than you expect. As I think I've said probably on Stockbox, the rig might break down, or you've got water issues, or there's holes basically underground. You're drilling limestone and there's a big gap and you have to sort of cement it. And also we can sometimes we drill a hole in like a day or less, and then you have to move it, and that takes time. And so it's just taken longer, and the lab is good, it's quick, it's close, it's in Marrakesh. It probably takes a little bit longer to turn around the assays than we anticipated, but to be drilling sort of early September and having your first set of drill results out mid-November, so 6 weeks later, well, sorry, not 6 weeks later, 10 weeks later, it's not bad. It's not like, I don't know, some drill programs where you send your core from Zambia to Australia. and 4 months later you might get your results. So it's pretty decent turnaround.
Okay.
Time.
Things always take a lot longer in this space. Yeah, it's not a short-term win investing in mining stocks.
No, including the drill rig. I know people have been asking, where's the drill rig? And of course, as expected, there's plenty of people that think it's just a fantasy that never happened. But there's a whole story about that, where we went through a procurement process, which basically just means a really good friend who is a drilling contractor recommended a bunch of different rigs, different prices, different specs, and there's one particular one, a company called Multi-Power, which is sort of West Coast Canada, and we chose a rig, and then that got sold, and then they basically sold us an almost new rig that they refurbished. It took them longer to refurbish, and then there's a whole list of things that happened, and in the end, it's now quite close. So it's real. We have paid for it. Gillini, our major shareholder, really wanted to invest in our own rig, and it's a very simple drilling environment. So we're happy with that. We don't see it as a liability for us, and our team on the ground are fantastic. But basically, that's what they do, is provide geological services and mining services. So it's not a problem. It's just taken ages to get here, but we will have our rig on site relatively soon. Certainly this year it will be turning.
Okay, that's good to hear. And once the drilling completes, I don't know what the timeline is on that at the moment, but what will be the next steps, and what would be sort of your best case scenario, let's say?
So I think I said we'd like to be, this is the best case scenario, thanks for using that term, but like to be constructing in 2027, and hopefully first half, but things happen. I guess on the environmental permitting side, there's the EIA for the environmental permit, and the EIA for the processing plant. We have pretty much done the EIA. We may even have it, but I think we're having the EIA for the mining this year. So there's some things that are outside our control, but basically we're going to be drilling enough resources for 1,000 ton a day, 10-year mine life over the next, say, 6 months, and then going straight into feasibility study and looking to start construction as soon as possible. And we're gonna use the skills that exist in Morocco, with sense checking and a bit of I guess oversight, audit, checking from external consultants, but really the guys here know what they're doing. They've built lots of copper flotation plants in Morocco and overseas, and that's kind of we've got all the skills we need in the country to do a feasibility study.
Well, I do just want to, I know we need to start the Q&A really, and actually I've just seen a question that's popped up about people in country. Let me just see if I can find it. Well, it was something, I can't find it now, but it was about in-country experience. So I don't, because you're obviously there now, you're in country at the moment, but what, and you did allude to earlier that sort of, maybe a bit naivety running a sort of mining company, but what is the team like on the ground? What sort of in-country people do you have and expertise?
So our COO Nurdin is a close friend of mine now. I've known him for, I guess, a few years now. Is a mining services and geological services provider. So in terms of knowing the individual people out there and other providers out there that we need to do things, he knows everybody. So I'll give you an example. We were moving the rig today from an area to another area, and it needed to go up. And so there's a WhatsApp group where a load of guys that provide trucks are all on the WhatsApp group, and he's got a good friend that is on that group, and then they just went on there, and within half a day we had a truck on site waste and they're ready to pick up the rig and move it over the road. It's not great like driving the rig down tarmac roads, because it's on tracks and you damage the road, and goes down quite badly. It's just something you don't do. I think you can put plastic sheets down, or you get a truck to move it. So it's just a silly example that happened today, but in terms of getting things done, knowing people, whether it's the director of mines, or the various drilling contractors, the good geologists that don't want to sit behind their desks, but actually will go out there and walk for days on end searching for copper, or whatever mineral you're searching for, like the proper prospectors. He knows it's like a big village, and he knows everybody, and he can get things done. And also he was one of the first people to get his head around the new mining laws that came in like 2017. So in terms of getting environmental permits, and doing EIAs, getting mine licenses, and all that stuff, he's second to none. So it's him and his ecosystem that CMR and CMR shareholders are benefiting
some local knowledge. Yeah.
Well, lots of local knowledge. Yeah, the best local knowledge.
Well, that's good. That's great to have that. How involved, this is another question that came in, how involved is your joint venture partner in the exploration and ongoing work at Agadir? Is CMR taking the lead?
It's a bit of sort of diplomatic. We sort of so our joint venture partner is fantastic. He's a very, very good negotiator. So as you know, we've had a local drilling contractor drilling, and he'll continue to drill while our rig arrives, and actually he'll probably help us commission our rig. And our joint venture partner negotiated with a bunch of different drilling contractors and chose this chap, and is very, very low on costs, and the drilling contractor sort of not massively happy about his margins at the moment, but actually he's a contact of Nurdin, so there's a sort of a bit of a dance going on between where we're all working as a team. They're absolutely involved. Our joint venture partner is fantastic. He's been running the project for this particular chap for the last 3 years anyway. So and he's a very kind, diligent. He's an accountant. So we work as a team, and diplomatically, and it's good.
Good, excellent, good. Another question that's come. Yeah, that makes sense. Would CMR look to add any other projects, or is the Morocco asset the main focus for the foreseeable?
It's a difficult one, because if we do, it has to be as good as what we've got, because I know you can't really tell necessarily before you've done some work, but obviously we don't want to dilute the value of our asset base, if I can put it like that. But if something excellent came along and our shareholders were supportive, we'd definitely look at it. But it would most likely be, personally, I would prefer if it was copper, and not too far away from where we're operating, some sort of synergies. But we'd look at it for diversification. But yeah, but at the end of the day, it's not my call. It's a group decision, and but I think it would be in Morocco. We've got a great team in Morocco, and I think it's a good country to operate in. There is lots of opportunities that we look at deal flow, all the time. So yeah, it's not out of the question, but it has to be very good.
Okay, good. This is a nice question. So, drill results aside, are there any other major developments shareholders can expect to see over the remainder of the year? So, just thinking as we go into really the last quarter, really.
So, for me, I mean, commissioning our drill rig would be nice. I think I'm not sure if that's major. Drilling the rhyolite and seeing if that's 3 or 4 meters thick or 50, 100. I mean, that could be major. So I think those are probably, it's just drilling and trying to, I don't want to sound condescending, but educate our shareholders in the market of the type of ore body that we're looking for, which is very shallow and easy to extract, easy to process, but not sexy. We're not like 100 meters at 2.5% copper and 5 grams gold. That's not what we're looking for. We're looking for something that is very shallow and nice and continuous and easy to make money out of.
Yeah, well, exactly. Well, that would be good to explore that, Charlie. I don't know if we can perhaps look to do that, whether it's drawing comparisons with other projects similar like Tizet, for example, or I don't know, getting on the ground or something, talking to the geos. But yeah, to really try and understand, we're not going for that hot spot, let's say, the huge deposit there, but it's something that, if it all goes to plan, will in theory be a solid producer, a solid project for many years.
Yeah, exactly. Yeah.
Okay.
And there are examples out there. I just think in the UK market, I don't think there's been that many, if any, certainly not in copper that I can think of, where you've got a very shallow layer. The locals will call it a bar, be it like a sandbar, but a layer of shallow mineralization around 1%. It's kind of the continuity and the shallowness that makes it good, not the super high grades or thickness.
Yeah. Okay. But still, I mean, to be fair, was it what sort of 1 to 2%? I mean, that's not to be sniffed at on copper these days, is it?
1 to 1.2, not 1 to 2. So
it's sorry, 1 to 1.2. Okay,
yeah,
apologies.
So Tizet, I think, is 0.9, and I think there'll be areas of higher and quite a lot of lower grade, and then they blend it together. But we've also got copper veins on the property, and one of our new geos found an extension of a copper vein. There's a copper vein mine right next to us, and that vein comes into our property, and it's sort of copper and silver, and it's that's probably quite a nice project for most companies, but we're not focusing on veins at the moment. We're focusing on a nice, shallow, easy to mine deposit.
Excellent. Good. And I just see one final question. It was just on the screen there. I don't know again what you can say, but how well are the company's near-term financing needs, and does this depend on the quality of the results?
I mean, ultimately, financing and the level at which you raise money in the future depends on your results and your share price, I suppose. Dilution depend. The reason CEOs care about share prices is because they care about dilution, and also the way the market price is formed in London with market makers with massively wide spreads, where market makers that are basically not making a market still print their bid at so I think today we were 3.5 to 4, and then there's a lot of trades that go through at 4, but on the screen, or 3.9 whatever, but on the screen you're 3.7, and it's the whole thing is completely broken and nonsense, and that's frustrating, that whole bid offer spread thing, and wanting to raise money in the future at a high level so you minimize dilution and that, so that all shareholders that are investing make money, so you're not buying shares at 3.9 in the market and you've already lost money because there's a massive spread, and at the end of the day you look at your account and you're down on CMRS because of the broken market that we operate in and the market maker system. But in terms of sorry, I sort of went off on one there. I always like to have a dig at price formation, but in terms of our financing, well, I think we're lucky that we've got a wealthy family office behind us, and they have a network of co-investors that they invest in venture capital stuff. So, and also some of the guys that work there who've come to site and they've been on LinkedIn and stuff themselves, they've got friends, wealthy friends, a lot of them are ex-bankers that have bought stock and will continue to give us stock. We've also got quite a lot of warrants that are in the money. So I think, financing, I feel comfortable about it. But I can't really say, too much about, what when we're next going to raise money, how much we're going to raise. But if we have really good drill results, and I think we could probably put out a couple of sets of, we can go into the new year. But if we have, it just depends on, our price and demand. We don't want to raise too much if it's going to dilute people. We don't want to raise at a lower level. I'd rather just raise money privately as well without going to brokers, because as soon as you go to the brokers, the share price comes off, and probably because they speak to the market makers. But I'd like to raise money in the future from our network, and then at the end of that, when we've got plenty of cash, go to the brokers and say, by the way, we've raised this is the price, do you want to top up? That's kind of my approach, and maybe that won't happen, but that's what our strategy is.
Okay.
So we're not, does that make sense? So we're not sort of, beholden to, to a market that's just looking for a discount.
Yeah, well, that is kind of the problem, certainly on the London markets anyway. I heard a lot of CEOs saying that, but it is what it is. But nice to hear you've you're very aware of that, and what you've got your sort of strategy to work around that. So just finally, I know you're there in Morocco now. Just tell us briefly what you're doing there. What are you going to site? When are you coming back? I'm sure we'll be catching up on those any RNSs that come out as soon as they do.
Just checking up, having a look at the the rig and some of the core. And
okay,
the plan is that so like now the rig is being moved, as I said, to a different area where there's a rhyolite that I want to have a look at. So we're going to drill that tomorrow, and we know it's mineralized at surface, but we don't know if it's thick or just a couple of meters. So that's one of the reasons I'm out here, is just to I've got to sign a document as well, but see how the rhyolite drilling goes.
Okay. Well, it certainly sounds like, from what you said earlier, that you are active on the channels like X, for example, LinkedIn. So do try to keep shareholders updated on what's going on. It's always good to see, as investors in a company, what's going on the ground. Yeah. But thank you very much, Charlie, for your time. I know Robin has left us, but thank you to everyone. Thank you to Robin from Serval, Charlie Long, and of course Dan from Stopbox earlier on the round table. And thank you to everyone at home watching. Thank you, Charlie. Good night, and we'll speak to you again in the future. Okay, sure. Take care, everyone.
Okay. Good night. Okay, cheers. Thanks, bye.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.